Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, June 4th, pre-FOMC. Got NFPs, rather. I think I tweeted FOMC on tap tomorrow morning. Certainly, market expectations are for a print of about 220,000 for the United States. Unemployment widely expected to hold at that 5.4 mark. So we'll be looking at the dollar. We'll be looking at the highlighted setups, the euro, the CAD, the Kiwi. Obviously, gold is starting to make a move. Crude has also been on the radar for a lot of people. So we'll go over those trades as well. As always, guys, feel free to throw out any questions, trade setups you guys are looking at. We'll be more than happy to delve into it right ahead of NFPs. All right, let's jump right in. So first thing on tap before we jump through, I do want to go over the dollar index. You might have seen a piece here on Daily FX yesterday, dollar flirting with a breakdown. I just wanted to really highlight this near-term support structure. We're having trouble getting below it right now. Wouldn't be surprised to see a little bit of a pop, looking to sell rallies. Broader bearish bias remains. I apologize for that. It looks like the screen is not up yet. There we go. Is that better? Sorry, guys. All right. So now we're on the same page. Looking at the relative performance, obviously you see a mixed picture here. This is just from on the euro's perspective. So the euro is, in fact, looking at this, stronger against all its major counterparts versus the Aussie specifically. Euro-Aussie was on the radar last night. Another interesting pair that also continues to move through near-term resistance. But versus the greenback, we just take a look at the base dollar moves that we're seeing. A little bit of a mixed picture here, okay? And the index is reflecting just that. Euro down versus the dollar, or stronger versus the dollar, 0.43%. Sterling up 0.32. Biggest loser on the session, still the Aussie with a loss of 0.67%. And that's another one we'll take a look at. Hasn't really been on the radar, guys, just because of where we are, but we'll definitely take a look at that in a moment as well. So with the dollar index, again, 11,880, 11,898. You're probably sick of hearing me saying it, but it's still the main support that we're looking for. Momentum, holding 50, okay? Not interested in necessarily taking the dollar long, but certainly looking to sell rallies. Here's what the near-term chart looks like on dollar index. Before we go there, just to highlight again, you have the stretch high from February. The stretch lows just about from March, the pivot break back in April that gave us the decline. The highs, okay, from May, a basic 38.2, the 200-day moving average. I mean, I could keep going. It's a big region of support, and here's what it looks like on the intraday trade. All right, so this is the chart that was posted yesterday on Daily FX and on the radar charts here in SB. Here's what we looked like yesterday, okay? We had just come off the initial bounce here. We highlighted in yesterday's report near-term resistance near 11,928. That was a swing high here that we made earlier in the week, but more importantly, a really nice pivot in price. Okay, so that was the near-term resistance. Bearish invalidation still remains up at 11,960. That is this level here. Basically just off the highs that we made yesterday, but also the 618, which has been a nice pivot in price. So as long as we stay below that, we'll be looking to sell rallies in the greenback. Again, here we are probing deep into that 11,880 level. Nice tag of a clean 618 extension right off the high, confluence region. We talked about this briefly yesterday, tried to highlight it in the webinar, but just again, guys, using the slope lines to your benefit, this is just a basic trendline resistance, just connecting these 4 points here. If you take a parallel of that and slide it to the initial high that we put in for Asia, you see that caught the high exactly. If you take that sliding parallel and drop it to the lows that we made in the second, just continue to catch every drop here. So again, looks like we found the right slope. Near term, we see a break above 11,898, that key support region we've been watching. You can see a rally back into 11,928 again. This parallel, we'll be looking for short triggers here. On an extended break, we'll be looking for short triggers up here. A break below the lows, you're looking for 11,839. That completes a 50% retracement. And just below that, let me just zoom this out for you. You have the median line here off the lows that you made back in April. Okay, one touch, two touch pivot coincides very nicely right at that 11,839. Okay, so the levels are there. Heading into non-farm payrolls, I'll be very cautious, guys. If you get a spike high, if you get a rally, let's say we get a little bit stronger than expected print, 250, 270, I would expect to see a little bit of a near-term rally. Again, the only thing you want to have in your head, guys, is how is this going to impact monetary policy? That's the name of the game. Unfortunately, the market has been so perverted with, really focused on what the Fed is doing and trying to front run monetary policy. It's all interpretation of how the Fed's going to digest this. Okay. And we know that they're focused on inflation right now. So unless there's a big miss or a much stronger than expected beat, you might not even get, a major move. And if that happens, guys, everything stays the same. Okay. These events are not going to change our bias. They're certainly not going to invalidate, for example, our broader outlook, but they can be catalysts within that setup. So we are looking lower in the dollar. Yes. We're looking to sell rallies. Yes. I don't care what the data comes out at. All I want to know is when it's coming out. Okay. And when it does come out, if it's better than expected, you get a spike high. I'd like to fade that. If it comes out worse than expected, obviously the breakdown will be a little bit harder to catch. But those are sort of the game plans that we're moving forward with on the dollar index. Now, the preferred pairs that we'll want to trade are the ones that are on the intraday page, which we'll go over in a moment. But this is sort of where our mentality is heading into tomorrow's non-farm payroll. Any questions on the index? Again, I know, guys, we're stateside. We can't trade this, but certainly it can give us a very nice, clean picture of what the base dollar movements are doing. At its inception, this index was an equally weighted one for the euro, Aussie, sterling, and yen, just the four most widely traded currencies versus the greenback. So look for resistance here near term, 11,898, basically 11,900. With a break there, again, looking for short entries higher up. In a breakdown scenario, you got clear targets on the short side. And all of those are highlighted, guys, on the radar charts from yesterday. All right, right over here. All right, moving right along. So now that we have a sort of a clean picture of what the base dollar is moving, or what the base dollar is doing, and you expect to see possibly a pop higher here near term, maybe some short covering on some of the positions that were taken earlier in the week ahead of the major event risk, whatever it is, we'll be looking to sell those rallies. Getting into the intraday charts, first one up is euro dollar, all over the headlines, right? All over the headlines. What happened? What happened? What happened to Greece, right? Everyone forgot about Greece real quick? Because the euro keeps moving higher. I'd love to pick at the funny guys, but here we go. So 113.12, 113.13 was the level that we highlighted back on Tuesday. And that was a big level just on account of a nice confluence of the 764 retracement off the highs, the reversal day close. Okay, so if you take that day that we did on the 18th, that reversal day, the close of that session was exactly 113.12, and basic median line structure off the low. Okay, and they all line up right around here. You did get a stretch into 113.70 or so ahead of the open here on the euro. I'll show you the intraday chart in a moment. Again, today's close is going to be paramount. Keep in mind, again, we turned ahead of 40 in momentum, and here's going to be the first test of 60. Okay, so heading into non-farm payrolls, if we close above this region, momentum crosses 60 and holds it, we'll continue to favor the upside, looking for a stretch into 114.75, which is going to be the stretch high that we made here on the 15th. Actual high was 114.65. 114.74 is going to be an exact 618 extension off the low. So the levels are pretty clean. And that's what the daily chart looks like for the euro dollar. Michael, why would UK-based person want to trade the US dollar index? Low ATR and high MMR. Again, GS, it's a clean index. You know what I mean? The ICE dollar index, while that's the widely one used in financial markets, the Dow Jones FXCM dollar index, in my personal opinion, GS, just gives us a very clear picture of what the base dollar movements are doing. Why? Because it was equally weighted at the inception, right? Where the ICE dollar index is very Euro-centric. So if the euro is really moving strongly, you're going to see that react more. Where this one, instead of taking out some of the extraneous ones that are in the basket for the ICE, the Cad, Kiwi, things like this, this is just the most widely traded, right? So even though I can't trade it personally, GS, I use it just to be able to give me a better understanding of what the base dollar movement is doing. If it's a dollar story, which it is, obviously heading to non-farm payrolls, it just can be very helpful in your analysis. But even if you are trading in the UK, GS, I mean, with technical clarity comes opportunity, my man. I wish I could trade that index. I'll tell you that right now. We've had some beautiful plays on it. But for your consideration for the guys outside the US, I know we have a lot of them here. Just wanted to cover that. So I hope that helps, GS. He says, okay, thanks. I appreciate that. Guys, a quick side note, housekeeping. If you are newer to the service or you just signed up, please take a minute and go on the homepage. I see that there's a lot of guys who are not actually signed up for the SB Squawk Twitter handle. Just go to the homepage and click on this SB Squawk sign up form. Complete the form real quick with the information here and submit a request through Twitter. I will be more than happy to get it so that you can see these SB Squawks on your own Twitter handle. There's a big amount of you guys who actually aren't subscribed to the SB Squawk, so I just wanted to open that up and let you know that's there for you if you want it. Okay, GS says, really, UK advantage is London Frankfurt open times. GS, I completely agree. In fact, Eileen just said something earlier in the session today. Where is it? Saying I need to get back to the morning schedule. All the moves are then. Yeah, you've got the cream of the crop there, GS. 100%. 100%. And even if you wake up a little earlier and catch that Asia shift, it's been a good one. It's been a good one. So euro dollar 13.12. That's the level we're looking at. Here's the intraday chart, and here's what we were looking at yesterday. So we came into 112.77, which was the target that we noted the previous day. That broke. Okay, pushed into the 11.90 level, and that's the level that was the 618 that we're holding below yesterday before we plowed right through in U.S. trade. Okay, it turns out, guys, some of those positions that we missed. First of all, we did miss a lot of positions during the webinar. It's really hard for me to focus and track these trades, guys, while I'm on the mic. But keep your eyes open. You know, the Euro Oz that we looked at yesterday was a beautiful entry. Dollar Cad at the highs there was a beautiful short as well. So unfortunately, we missed some of those during the webinar, but there'll be plenty of opportunity. We're expecting a lot more volatility here. So keep your eyes peeled. But for the euro, it's been, you know, as clean as a scalp as you can get, not only from the levels, but also from the triggers. So, you know, this was the trigger that mounted the assault, taking you through 11.90. There was another trigger here that gave you the break. Oh, okay, in early European trade. And that was actually a really nice opening range. Here's the European open. You made a low, you made a high. An hour later, you break through the highs, looking for a stretch against the low. Initial target was 113.12. This was pretty big. And then the 2618, 113.76 to the pip, guys. The high today, 113.78. All right. So near term, you're coming into a nice area of support right here. Why? Well, let's take a look. So we've been working with this structure here off the lows, offered some really nice support, some nice pivot breaks on both ends. You take a sliding parallel of that slope to the high that you made here on the 26th, caught the exact highs again, nice pivot, near-term support, okay? This is going to be minor, right? What's the major? Right here. Okay, this median line right off the lows, and that comes in that same exact region. So if we break below that today, again, with what we just went over on the dollar, right? If we do get a pop higher in the dollar, look for the move back into the median line, okay? We're broadly staying constructive above 11.90. The bearish invalidation level noted on yesterday's report remains the same, okay? Also keep in mind, we've been making some divergence. I do not, as I always tell you guys, I'm not really a fan of these divergent points that are in overbought territory. In fact, the closer the divergence points are to 50, typically the stronger the signal. But ongoing divergence here does suggest that we are at risk for a little bit of a pullback for the euro. Broader trade remains constructive above 11,090, 11,008, 11,890, 11,889. Questions on the euro? Here are the topside targets here. If we break through 1376, you're looking for 1473, 1465, and basically that's this region right here. Okay, what happened with Greece, right? Everyone's talking about Greece. Oh my God, ECB's doing this and doing that. Here we go, guys. There's no No change. In fact, the ECB, all it did was spark a catalyst. And this is a perfect example. Do you remember how on Monday and Tuesday we're talking about long euro exposure just based on where the technical structure was on the daily chart? And here's the ECB coming out saying no change. We're not upping QE. We could, yada, 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 maybe a little bit softer inflation, but we expect it to pick up. Nothing. All fluff. And here's the market launching a rally into resistance again. Okay. Daniel. Daniel says I'm laughing about Greece with my 109 longs. Yeah, and we poke fun at the fundy guys all the time, guys, and there's really it does hold validity. Okay, they're the same thing in my opinion. The technicals are a manifestation of what the fundamentals are doing. Whether you look at this or whether you look at that, we got to keep in mind what we're looking at from a trading standpoint, right? Now, I can do analysis and Greece's GDP is this and the CPI is this and they might do this. Great, what's the trade, right? At the end of the day, guys, if you ever have a discussion with a fundy guy who's super fundamental, just after he does his spiel, what's the trade, right? Because today I just saw another headline saying euro dollar coming to parity. Based on what, guys? We're 400 pips off the low, and these guys still talking about parity. Could very well happen. I'm not saying it's not, but guess what? I'll get bearish when the technicals tell me I should get bearish. Because if you're working off Greece, you're 400 pips in the hole right now. So that's my spiel. Sorry I went on a little rant there, guys, but you do, when you're a full, heavy technical guy for as many years as I am, you do get attacked by the fundy guys when your bias is against what the, macro picture says, as it were. So, we'll be focused on the trade. We'll let other guys worry about, the headlines and the stories. Eileen says, day jobs always get in the way for the schedule, but the feeds the capital account. Cheers, Eileen. And again, everything's archived. I know you know that. Daniel says, amen. He's on the same page with me. Cheers, mate. Kick letter. Yeah, he's a very fundy guy. He is. Eileen says, and Draghi really sparked a mess with mortgage rates too yesterday. Parity. Make money by going long. Someone needs to be buying when they're selling. You're absolutely right, Eileen. You know what? I just try to stay away from all that noise. Okay, I want to be mindful of what the headlines are saying. Extremes in sentiment are something that Jamie loves to look at. I'll get emails from him all the time. Hey, look at this headline. Look at this headline. And when you're seeing what you're seeing, where people are still, despite the euro rally, still looking lower, despite the dollar drop off, still looking higher. When the markets aren't believing the move, that's the move you want to press. The famous saying says, go cautiously with the crowd, boldly against. Okay? And certainly it's a mentality that I've learned over the years as well. So let's get back into the charts. Great discussion, by the way, Dan. But let's get back into the chart. So near term, 112.77, same target that we noted on the upside, near term support, nice confluence there. I do need to note that despite the divergence, the momentum signature remains positive, which is why before we start attacking any type of short exposure, even if the dollar breaks out, we do want to be mindful of that. Okay, since the start of the week, at the lows, just ahead of the lows, you probed 40. Ever since then, 70 break, very strong uptrend. Turn ahead of 40, very strong uptrend. 70 break, very strong uptrend, right? Turn ahead of 50. So we really need to start breaking this this slope here, as far as the pullback's not getting any momentum on the downside. So we'll be looking for that break below 1277. If this holds and you get a long trigger, again, topside targets here are pretty clear. Okay, so that is euro dollar. Next up on tap, dollar CAD. Kind of falling out of love with this one. It's been a little messy. Here's what the daily looks like. I've really been focused more so on the Kiwi Dollar yen. I took a position on yesterday as well with the swing trades that we're looking for the short. That's a beautiful one. We'll go over that as well. But here's what we're looking at with the dollar CAD. A whole lot of chop, guys. The support structure that we were looking for break, if you do break it to invalidate the upside, is right at these lows, the median line off the low, the 100-day moving average, the lows from March, the close lows from February, all line up right here. Okay, momentum is holding 60 resistance, so I don't necessarily want to be pressing longs up here, and the downside just hasn't materialized. The broader focus remain weighted to the upside here for dollar CAD. Nothing's changed. But again, if you look at the ranges we've been looking at on the daily chart, a break below this, you're looking for a possible drop as low as 2240 to complete a 50% retracement, and that would be the lower median line parallel. A move above yesterday's highs, which is what we noted, would target first the HDC, the high day close, okay, from the 18th of March. That comes in at 2560, 2559, and then obviously that 2615 level coincides very well also with the upper median line parallel. So it's sort of a drifter right now. We're not really operating on this setup. Here's what the intraday looks like. It's been a whole lot of chop. The level that we noted yesterday as the near-term bullish invalidation level, it got tested, but we didn't get any play below. Okay, we just snap those lines. There we go. It was right here. It was the confluence of this nice pivot in price around 124.50 and a longer dated median line in light purple here. If you can see it, has been some decent pivots, but this dates all the way back to the highs. Okay, catching the lows here, catching the pivot here. Again, not the cleanest setup, right? A little messy. And this is what I mean by clean. Someone was asking about this last week. I want to see markets start to respect the lines a little bit more precision instead of these run-throughs. So here we are towards the highs. Again, looks a little vulnerable. Momentum not really able to make any progress above 60 yet. If we do get a rally, just like yesterday, guys, this was an awesome opportunity we missed during the webinar when this thing was rallying right into 25, and we were even talking about it right here, saying as long as 25 holds, we want to stay on the bearish side of the trade. Unfortunately, again, that one took off right before we had a chance to get in. The decline coming right into support at 24.10. Got a quick 100 pip drop on that one. So I'm going to sit this one out. I'm not really interested. Remember, tomorrow is a double whammy for dollar CAD. You get U.S. employment and Canadian employment. And here's what we're expecting on that front. So if we take a quick look at what the Cad Economic Docket looks like, expecting the unemployment rate to hold at 6.8%. Net change, we're looking for a gain of 10,000. Last month we saw a decline of 19.7 thousand. So certainly on a weaker read here, and even if the dollar comes out as expected, you could see a nice rally in the dollar CAD as well. The operative broader, bias still remains weighted to the upside. The whole thing with this week is whether we're going to see a break, near term below that little structure there to give us a recovery. It's been quite a stretch at this point. That being said, a break of the highs, 2617 is your first target. Nice confluence region. All right. Any questions on the dollar CAD setup? And again, I'm not too keen on sticking with this, guys. That's why I have it in a dashed line here. We want to see if it's going to give us any guidance. It hasn't really been the cleanest as far as capping price, but we just want to keep that highlighted region. This is what we're going to focus right now. We'll drop that down with the slope as the near-term bullish invalidation level. So if you break below that, look for another drop into the 2410. That's that basic 236 and the lows from yesterday. And again, one other thing I just want to highlight are the slope lines that we've been looking at for dollar CAD, right? They've been offering really, really nice pivots. That also comes in at 2410. Slope line we added yesterday off the highs from the 11th. Yeah, nice coincidental right here as well. Yes, Dan, we are short already on the dollar yen. If you look at the tweet or the Twitter yesterday, we looked at that entry. It wasn't on the swing chart, so it's not official trade for SB Trade Desk, guys, but it's already pretty up. Here's what the intraday chart looks like for dollar yen. So at its face value, you still want to wait for a break of the weekly opening range. It's very clean, 123.80, 124, 125 on the upside is basically your Monday, Tuesday stretch, and we've been sitting in there ever since. But also, you got a trigger break here early yesterday. Or this was in overnight trade this morning. And then you got another trigger break right here. So 3/4, I'm already out 3/4. The swing trades, guys, just to keep things on a clear path here, the swing trades are looking deeper, right? For me, I already got out 3/4 at that 23. I had my limit at 23.90 ahead of that. And there's just a quarter to trade with the stop at break even. So if it gets break even, if it breaks even, then No harm, no foul. But looking at the dollar yen, guys, just some quick notes on this. Again, I'm not going to be actively trading this into tomorrow. I do want to see what the reaction is tomorrow. If you do get a dollar breakdown on the index and a break below the weekly opening range low, I do think you have a nice play to the short side. But you know, some of the crosses will be in focus as well. So just some quick notes. If we take a median line off the lows here and extrapolate it off the yearly high that we put in on the January open, also on that last stretch in December, what was that, December 23rd, that one is even more accurate, catching that high. This completes a 1618 off the low, and obviously mirrors the highs from 2007. Okay, so we already highlighted this major key region earlier. We've kind of been sitting right here, straddling it for the entire week. You know, it's an easy play for me once it breaks. You know, let me take a step back, guys. When a market goes range bound, which is essentially what we're having here with dollar yen, right? This is actually an opportunity too for near-term traders. Selling at resistance, buying at support. Pretty easy. You just have to make sure you're targeting some sort of high. So the stop here would have been against the swing high from the second. The stop here would have been against the swing high from the New York highs, right? Or actually, that's where it was when we entered the trade. So the range-bound market still offers opportunity. But on these markets, guys, it's not something you want to do where you want to fade off a quarter and try to press the trade. You want to be a lot more nimble, which is why 3 quarters were already out. Yeah, I'll leave a quarter on just because I do think you get a broader correction here. If it gets break even, again, it doesn't change our bias, but we'll look for a little bit clarification. Eileen says she's having a little sound issue. Is anyone else having a sound issue in the room? Do give me a heads up. Sound is perfect, says Mark. Thanks for that, man. All right, guys, if there's any ever issues with the sound, please just do let me know. It looks like Eileen is just going to restart her computer. All right. So any questions on the dollar yen? I do like it. I think you get some sort of clear, definitive break. You know, you're pressing resistance, so I'm not really interested in the long side. The broader long side of trade obviously still in play, but you know, with all the event risk on tap, I'm mindful of a move sub 123.80. All right. Just looking at my notes here, guys. Give me one sec. Levels of interest I had jotted down. Also, 122.80 and 122.50 are regions of interesting support as well. 122.80 is the 50% of the entire advance. Just from this last peak low we put in the 22nd of last month. Okay. And obviously 22.50 is going to be that swing low pivot that we made. Excuse me. Last week. All right. So, moving right along. That's dollar yen. Not on the intraday page, but certainly we highlighted on Daily FX earlier last week. Looking at the Kiwi dollar. Did someone here have a question on the Kiwi? I think I saw something earlier. Mark, Kiwi Cad. Yeah, we'll take a look in a little bit. He just wants a screenshot of where Kiwi Cad is. Let me see if my chart's updated for you. Whoops. I hate messing with my lines. No. Okay. Yeah, I mean, it's the same key support, Mark, that we've been looking at. So you got some divergence into the lows. That is apparent. You have a resistance trigger that looks like it's might still be in play. Let's just connect it to this high and see how that pans out. It's the high in price. Yeah, on weaker CAD data tomorrow, I do like this higher. I do like this higher in weaker CAD data, and that's on the premise of the Kiwi. So let me just take a look back. Take a snapshot if you need there, Mark. On the near term, I don't know if I have a scalp set up for you. Let me see. Yeah, so looks like I did take a look at this earlier in the week. I think we might have asked about it here in the webinar even, right? So really tight range, right, for the last 3 days. There's nothing here for me, not even not even from a scalping standpoint, guys, from a range, it's too tight. You know, this is 24 pip ATR, I understand, but not much conviction here. I'd rather be buying pullbacks while above this region that we highlighted. I guess we highlighted this yesterday. You're basically looking at just median line support, median line parallel support, but it's been a pretty nice slope, right? That break right there really just charged the entire drop. So it's only fitting that we keep that slope in view. Near-term support, 88.70. It's really what you want to focus on. In fact, if you take a retracement off the lows, I bet you, it's like a 38.2 or a 50. Yeah, so the 38.2 comes in at 88.84. The 50 comes in at 88.67. Sort of the support that we'll look for on the Kiwi CAD. On a topside breach, you're looking for 89.80, 89.78. Hope that helps. It says CAD weakness in an hour could make a jump. Yeah, possibly. You do get the IV Purchasing Managers Index. I do want to tell you, just real quick, Mark, that it's actually a pretty low priority print. So I don't necessarily think we'll get too much volatility on it, but heading into NFPs and CAD data, definitely a possible play. He says exactly what I'm looking at. Above 90 becomes very interesting. I would agree with you. Yeah, above 90 does get very interesting. And here's what we're looking at for the CAD, and this is why it makes sense. Hey, Mark, you're more than welcome, man. Always willing to take a look at some pairs that I haven't necessarily been focused on. So if we go to the, again, let's shift the focus back to the intraday page here on the Kiwi. Here's what we were looking at yesterday on the daily. So remember, guys, the major operative trade that we've been looking at, and the whole reason we're looking higher in the Kiwi is not because we're trying to call lows or fight the trend. It's because of that long-dated trend line. We went over this yesterday, so I don't want to waste your time, guys, but long-dated trend line, the slope of which originates back to 2000, comes into view. The operative current lower median line parallel caught that as well. And that's just below the 2011 low. We spent 1 day there and we rocketed right off into resistance. So near term, momentum is holding sub 40. That's not a bullish thing. We'd want to see that 40 break to the upside with a coincidental move above 71.75, and that would shift the focus back into the near term targets at 72.60. Okay, this actually could be a nice swing trade here, with a stop against the lows here, trying to look for that monthly pivot, upper median line parallel. Nice, just shy of 100 pips to the upside. Here's what the intraday trade looks like on the Kiwi Dollar. So, a very similar trade in dollar yen, in that the interpretation of the opening range really has us kind of neutral within this range below 71.90. Initially, this is what we call the initial opening range break for the week, right? But once you cross right back into it, that eliminates that bias or that trigger to maintain long exposure. So really, objectively, I do need to see a break above 71.90. That being said, the trade is still approaching that major key support, 70.90, 70.86. The low day close came in at 70.86. Remember, Jamie was highlighting 70.90 to you guys a couple weeks ago. So we're right there. So not interested in short exposure here. Obviously, I'm not trying to be long the dollar necessarily either. I'd want to see maybe another spike low into this on NFPs, give us the opportunity to fade it, or on a break above 71.90. You'd look to buy pullbacks, looking for the upper median line parallel. Oh, sorry, those lines hadn't snapped. But again, broader formation we're in is pretty clean. So we really do need to necessitate a break above that median line off the highs to get this thing going. Also note momentum. Momentum remains constructive, right? Start of the week, you held 60, you held 40, you held 60, you held 40. Neutral, topside break of the initial weekly opening range. Took us right into 70. Pullback fails at 40. Pullback fails at 40. We really want to see that 60 break again to confirm a nice upside bias here for Kiwi. Again, we're all spent on Kiwi data for the remainder of the week, so there's nothing really coming out of that. Look for the U.S. to be the driver here as we head into tomorrow. Focus on the daily chart is still that key critical support just below the 71 handle, which was the 2001 low. Any questions on the Kiwi dollar? Looking higher against support, but be mindful as we head into NFPs on a dollar drop off. That's kind of the scenario you want to see is a 71.70 break first, and then look for that monthly pivot. All right. Last thing I want to go over. We did the dollar, we did the CAD, we did the euro. Is a quick note on gold, real quick, and then we'll jump into the euro Oz. Here's what gold looks like near term. Okay, and the levels haven't changed since like 2 weeks, guys. We're testing that 76 barrier, 1176. Here's what we were looking at yesterday. We noted that the trade remains bearish while below this region of basically the 125 handle. It's essentially the upper median line parallel there. But as long as the trade remains below that, we maintain a downside bias here on gold. So last night's notes, we need a close sub 1183 so we can get a near-term so we can maintain the downside bias. Yesterday we didn't. Remember, we stretched into the lows yesterday as low as like 1178, I think, was the low. 1179. And then we closed above it. So it wasn't really the validation I was looking for. Here's another press into the 618 retracement, just off the swing lows here for April. Basic trendline resistance broke, acted as support, and here we are testing it again. Confluence. Look at the trend line, or bring it into a line chart, right? This is the level to break now for the, what's the word I want to say, for the drop off, if you will. If you get gold below 1176, I think you'll see real quick 1164, and then the major key support is 1150. And 1150, interestingly enough, on the weekly charts is something we've been watching, I'm not exaggerating, for over a year. Right, so if we look at this from the weekly standpoint, that 1155 into 1140, 1138 is essentially littered with longer term 618 retracement. Move that over for you. 1618 extension off the all-time record highs in 2011, and 100% extension from the decline off the swing high from 2013. All line up right here. Add to that basic trendline support dating back to 2008. So always good to take a broader look, guys, at sort of some weekly charts here to get a picture of what we're doing. We'll be watching this one for the close of the week. Nice trigger action here on the longer term charts tend to be very fruitful. And certainly on a break of that 2008 trend line, you'd be looking for that 1150 to catch the lows. Broader picture type deal, okay? If the dollar sells off aggressively, it's really going to limit the downside that you see in gold. So we want to be cautious. If the dollar breaks down tomorrow, not going to be a day where we're going to want to necessarily start shorting gold. Because remember, gold catches bids on two major things, historically speaking. A hedge against inflationary pressures and during market turmoil, okay? During the 2008 crisis, during market corrections, during recessions. So right now, obviously, we don't have a recession or a correction or anything like that on hand imminent that's making markets really concerned. So the other thing is an inflationary hedge, the other side of the coin, right? And inflation is running lackluster. It's slower. But that means the Fed is going to have to hold back on normalization. And that's where the dynamic for gold breaks. Okay? Whereas typically if inflation is running high, people want to put their money in the relative safety of gold so it's not diluted, right? But now the market dynamic is, whoa, if inflation starts to pick up, the Fed's going to normalize. That means higher interest rates. You don't get paid a dividend for holding gold, but you do if you're getting interest on your dollar, right? So it's very important to keep that dynamic in the back of your head right now. That stronger dollar or a stronger inflation print is actually going to not benefit gold because that'll hasten the Fed's move to normalize policy. So again, just keeping the broader fundy picture or the broader macro picture into view. Watch this near-term support. You have the levels clearly played. At this point, we want to bring down the bearish invalidation level to the highs that we made over the last couple of days. You're basically looking at 11.95. All right. So finally starting to get a move here on gold. We'll see if we can clear the bottom of the range. You're at rock solid support here. So let's see if we get through that on some dollar strength tomorrow. All right, Euro Oz. Here's what we look at on the daily. I'm not sure which one of you guys brought this up yesterday. Sandy says the weekly S1. Gold is at the weekly S1. Is it right here as well? Right on. Right on. Love when those coincide. Only helps. And this is a 618, by the way, guys, of the entire advance. And we've already completed a 50% retracement of the yearly range. So again, these fibs with gold, just really very helpful in trying to ascertain. I just got out of a short, Sandy says. Very nice, Sandy. It's exactly where I would have taken the profit on it. Well done. Well done. Okay. Euro Oz. So here's what that trade looked like in overnight trade. I'm not sure who brought it up here in the room. Mark, it might have been you. Was looking at this trade as we were in the webinar yesterday. We highlighted 144.40, 144.46. Actually, a former colleague of mine that works at another brokerage was super excited to try to short this at 144.46. For me, guys, it's a clear tell. I mean, why would you want to press something that's in overbought condition? I tried to note this yesterday. A lot of people have this misconception. Oh, it's an overbought. We should be looking to sell. That is, couldn't be further from the truth in the near term, guys. At the end of the day, when something's in overbought condition, that's why the market has so much push behind it. That means there's so many buyers that have pushed this oscillator into the overbought condition. Do I want to jump in front of that train and try to hold my hand out to stop it? No, you're going to get steamrolled 9 times out of 10. The trigger for an overbought signature, and this is, again, kind of what irks me with a lot of the education that's being put out there, guys. People don't really take this into account. Don't forget everything that you learn. The best way to learn these oscillators is to go back in price action and see how price responded. That's it. That's it. I'm not completely against trying to take an Aussie long, but against the euro is not where I want to play that position. So, try to stay as objective as you can. Bottom line, this was the breakout or the level that we were looking at right here, into that level, into the 45. What was it again? Into the 45, 80, 46, 15 level, the resistance that we were holding at in yesterday's piece. Momentum was still overbought. So you can't really get too excited about trying to press a short there, even from this region, until you get a break back below the 70 region, which you snuck here very briefly, but you couldn't even make it past those previous lows with much conviction before this thing popped into a new high. And again, also from a timing standpoint, this is the open of European session. So I'm not going to really necessarily take a short right into the open of the European the session, especially if I don't have necessarily any type of meaningful trigger to the downside. This is a 5-point trigger that we were waiting for. There wasn't really much. Remember, I'm never going to be taking triggers in overbought. I saw someone tweet at me or send me, was it a tweet or an email yesterday, of this. That's not a trigger I'm necessarily interested in taking, because irrespective of how many points, even if it was a 4-point, it's in such overbought condition that you're still overbought. I wanted to push through something like this to suggest that we're seeing a turnover. And even this right now, guys, you're still above that major key region. So if this trigger break gives out with a break back below 45.80, that's a different ballgame. That's a different ballgame. So right now, essentially, you're still constructive above 145.80. You'd need to see that break for me to start even pressing shorts. Watch that trigger. But I just wanted to highlight, we were looking at this yesterday. Here's where we were during the webinar, right into the close of the webinar at 9:30. We went right into 144.46, which was that level that we were talking about. Again, the median lines here have been exquisite. Okay, really nice plays. Pivot, 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 false break. And then we had this one right here, which caught almost all the lows. This is all based on the median line extending off that low that we made back in, May, right? A median line off of that swing low actually caught that advance and is giving us a pivot right now as we speak, okay? And one other thing I wanted to do is if you take another median line here near term, or not a median line, but within the confines of this structure, we take just a basic pitchfork off the lows. Okay, you can find that that median line actually is catching all of the highs that we're making here on the weekly advance. So this is just taking into account the weekly range, which is why in all my charts, guys, you'll see a tag for where the week opens. You know, we assess each scalp setup on a case-to-case basis as we get through. I'm not sure why I'm not able to move that. So if we just take weekly range into account, nice median line, proposed median line here, catching the highs. So what does that suggest should be our near-term bullish invalidation level? Right here at this confluence. All right. Add to that, let's take a retracement off the low, see if anything interesting comes out. I'm just going off the cuff here, by the way, guys. Opens up that range even deeper, just into 44.50 again. So the same exact level. 45 again. The same exact level we were looking at as we were holding this resistance confluence into the median line. That's basically the range. Opens up a little bit more that we're looking for as near-term support for Euro Oz. A break below that, you're probably going to see a little bit more of a correction towards 44.45. I'd probably not even be surprised to see a drop into 43.80. We'll have to cross that bridge when we get there. Near term, the immediate bias looking lower for a possible long entry back towards that 45 handle. Topside bias broadly is still in play. Again, a breach of the highs. You're looking for heading into NFPs tomorrow. Not that you'll necessarily get a major play off of this pair per se, guys. But, sorry. There we go. Topside breach looks for that 47.60 level. Again, that's a basic 88.6. You know how those commodity pairs tend to react very nicely to the 88.6 retracement. It's 47.60. And then you're basically looking at 48.75, 48.90 as your next objective target to the upside. Broadly speaking, this could be making a massive, large head and shoulders formation, guys. If that is the case, the measured move takes you way beyond 149, and we'll be looking for, confirmation of that as we get deeper into the month. But I do think you could be making some serious moves higher here in Euro Oz. And even if you look at the momentum signature, a change in behavior is obviously happening here. You had some divergence into the lows, equal lows in the oscillator with new fresh lows in price. In my mind, is still divergence. Even if you didn't consider that divergence, you made a new low in price here and obviously a much higher low in the oscillator. Not just that, since the start of 2015 trade, this is the first 60 break you're seeing in momentum after multiple drills below 40. Okay, this was your last 40 pop. On the divergent signal that you got here, momentum had been holding 40 for the entire month of April as support. Last month was sort of a wash and a chop fest across the board. Here's your first 60 break in momentum. Okay, and that 60 break coincided with a break of that April high. So it's, in my mind, that's a pretty clear indication that the broader bias remains weighted to the upside. This breakout also invalidated the 200-day moving average, which has been a clear pivot in price over the last year or so, heading into late 2014, and that's been offering some support. Right now, that level coincides with the lower median line parallel, right around 143.40 or so over the next few days. So it's a long ways off from where we are right now, but definitely an interesting trade idea on a pullback scenario to get long. On a scalp type of basis, we're looking along for long triggers while above that major key support confluence into 45, basically. Questions on Euro Oz? Mark saying, so why sell Euro Oz? Yeah, that's what I was asking him. And his basis was on the fact that the Euro, again, if fundy guys will be fundy guys, that the Euro doesn't belong up here, that this is all just short covering. A short covering rally of 400 pips or so off of a major key support is one hell of a short covering rally, let me tell you. We could be definitely making a larger base here, so we'll check that out. Mark says 46.28. I had a 1618 extension there, a 1618 at 46.28. Where's that extension taken off? Just the weekly low? He says looks like 146.28 is also the daily reversal. Yeah, the daily reversal they saw in early February. I had that at 146.54 or so. A little bit higher than where you're looking. Do I have that highlighted? $146.13. Right, those are those peak highs that we made. In any event, I'm watching the near-term chart here for Euro Oz, Mark, and I'm really more focused on the trend lines right now. More focused on this median line, just because it's been so clean, and all those median lines we've been adding since the start of the week here have really given us some nice plays. He says, yeah, your chart is cool in the 30-minute. I like it. Cheers, mate. Question here says, a platform question. Is there a way to set up an auto limit to take off a quarter or half, etc. of the trade? Or do you set the opposite trade to accomplish this? So there's actually a new version, guys, of MarketScope and Trading Station that'll be released, I think, at the end of this month. I definitely I've been talking to the developers. There's a lot of new features. I think that's one of them, Eileen, to be able to set specific stops of variable position stops on the position. Right now, yeah, the only way you can do it is just to go in the opposite direction. If you put the limit, it's gonna if you do this under summary, if you do net limit, obviously it's gonna take the entire position. But typically, again, for exits, I got no problem just putting a limit. For entries, Eileen, I definitely like to be there for the entry. I'm looking for a trigger in near-term price, so it's a little bit different. But as far as your limit is concerned, yeah, you just want to put in the opposite direction. Can you talk about the pitchfork and shift option? So, Chintan, you can't do shift formations here on MarketScope. You can on Trading Station. That's where I do it. Oh, he's asking me to talk to the developers about it. Chintan, already ahead of you, man. That and copying pitchforks. I've been hounding them about that stuff for months. Unfortunately, I don't think they got it out early enough for this release as far as copying the pitchfork. I haven't gotten a response yet about shift, but I'll keep you updated. Long story short, if you want a quick way to cheat the shift, a couple of years ago, I figured it out when I was first, really getting my feet wet on more focus on median line formation. A basic shift, guys, all it is if you take a retracement of the operative first leg up, like this. Sorry, a little lag in my computer. And you take the median line origin right to the 50% retracement of that first leg you're measuring. That is essentially what the shift is doing, and it's going to deaden the slope for you a little bit. This little trick. The only trick that you want to keep in mind is that it's not just bringing it to the 50, but it's bringing it to the 50 where the 50 confluences the trend line of those peaks. Don't ask me how I figured this out. It took a while. So if you do something like that, that will shift it for you. You can see actually on a shift here, not bad. Not bad. Almost caught that low to the pip here. Remember, 145.80 is the support that we noted. Does that help, Chintan? He says, cool. That I know. I learned that from you only. But if it comes an option built in the drawing platform, he says, or when the chart drawing, it can be even faster. Yeah, 100%. So Chintan, yeah, I know you've been with me for a while. We figured that out a couple of years ago. So there's a quick way around everything if you need to stress a technical factor. So it's a quick way out, and no worries, I'm already on them, trying to get that added to the platform. So again, we'll stick with this for now. We'll watch near-term support at 45.80. And again, this is going to be the bullish invalidation level. As long as this holds, you're looking for long triggers. You're looking for a break at that 46.80 high. All right. Any other questions? Hey, Chintan, cheers to you. I appreciate that, man. Are you interested in Jamie Sterling Oz short? And do you know the area to watch for is in 1999? Sterling Oz, a favored pair of mine to actually scalp just because of how massive the ATR is. Looking at 212 pips on a daily basis. So you can imagine, 50 pips per scalp. Ends up being a good day when it's going well. Ends up being a real bad day when it doesn't. I don't have a personal scalp setup here. I do think long term, you could see a pretty big drop off. Okay. The level I'm focused at is essentially the highs from February, but more importantly, you're looking at this median line, which has been a structure we've been watching for almost a year at this point, right? Since July of last year, or the low September, not quite a year, but that also highlights the 1618 extension from the advance off last month's low, or the 100%, excuse me, and that still highlights that median line region. So key resistance, I don't have a turnover in momentum yet. Again, it's important to keep in mind, guys, the different sets of strategy of what a swing trader is going to look at inherently, where they're trying to catch the swings against a high to grab the next leg down. We need a shift in momentum. We need a visual trigger to tell us that there's something happening here to refute the upside of the trade. That being said, major key resistance basically into the 2 region. 20030, 20080 is going to be major key resistance. But that's what I'd be looking at. On a longer term prospect trade, just want to see if we have any parallels here to work with. Could be a nice region still. Still highlights the same exact levels. And that's when you have a lot more emphasis and a lot more confidence in your analysis, guys. When you're drawing these median lines and you're drawing these reaction levels to see where the market has found some sort of significance inflection, and they map out directly with one of your fibs, directly with a major high or low, directly with a longer term moving average. This is when you have much more confidence in the set. So certainly below that 20080 level, longs are at risk. On the near-term chart, see what it looks like. All right, so I have set this up for the weekly open. Yeah, it looks like that median line structure we were looking at earlier in the week just gave out. Let me snap some of these lines real quick. Okay, it's that same level of resistance. Yeah, I don't see a play here for us, even for the U.S. Open, just because the stretch is so big already. You're looking at a low in 98.40. You're over 100 pips off that region right now. Also, just as a disclaimer, not for the faint of heart, guys. It's a pair that the volatility is there. Do you know what I mean? And if you're newer to the strategy, each loss on this is going to be a much bigger bite. So not for someone who's just getting started out with our strategy, but certainly for us, we'll be looking for possible short triggers back up into that region. If the Aussie breaks down, we didn't cover Aussie. I just want to talk about it real quick. Obviously, we're heading into the U.S. Open now, and I need to run, but a quick look here. So 78.18, the exact snap high, just ran through the 100-day moving average, and here we are going back below the median line. If this is an operative structure, if this is the right slope we're working with, if we close below this today, we have to continue to look lower. Momentum is not that constructive. We did get a 40 bounce earlier, but here we are turning ahead of 50. Okay, and even the trigger that put us short on that break here last month on the 26th, you would think that trigger would give us a nice upside play too. We're back below that anyway. So even on a basic look at that, a little bit concerned. So on the near-term chart, here's what the Aussie looks like on the 30. This was the bearish invalidation level that we talked about yesterday in the webinar. We did a whole lot of nothing until last night, late Asia. We plowed right through it, and that kind of invalidated, at least near-term, the long side for me. So I do think you possibly get a deeper cut here into 76.76, and this is another region I'll be looking for possible long exposure. You're getting divergence in momentum near the lows. That's good. You have a resistance trigger here off the highs that is in play. Okay. First it gave out on that pop earlier, but I'm going to stretch it to the high we just made. And we'll watch that. So divergence into resistance trigger break 9 times out of 10. As long as the timing of the day is right, that's a trade I'll take. But the risk is still for a drop into that 76.67, 76.70 level, which also represents that median line. All right, so interesting price action here for the Aussie, but I just wanted to highlight this, as we were looking at Sterling Oz, right, as a possible scenario here. Again, that highlights that same region as the lower median line parallel, just for this near-term formation. With the same respect on the upside, the breakout level, it's going to be right around here. Okay, and this little nook right here, basically 77.30, right up onto the lows for that swing low for Europe, or that's actually the opening range low for Europe, 77.40. A nice 10-pip range of resistance here. Breakout above that, be much more comfortable playing the longs, but the momentum signature since the start of the week looks like a change in behavior, and that's my problem with it. Holding 40, 60 break, 70 break, this thing's constructive. 60 hold, keep looking higher. 60 hold, keep looking higher. 50 hold, keep looking higher. Now that we've broken 40, that dynamic has changed. And now that we're finding resistance again at 60, keeps the downside bias in focus for the immediate term. Okay, for the immediate term. Did they just tag you out of dollar yen? I don't know. Let's see where dollar yen is. Yeah, I got stopped out. So we're flat on this. Again, we'll be looking for re-entry, honestly. We'll look back on this trend line here. We'll look for possible triggers. But, we'll continue to favor the short side while in this range at least. Remembering that the major key support at 23.80 is what you need to get this thing going. All right. Are you okay? I already got that question. I think I got all of you. Cad weakness in the hour could jump. We talked about that. Parity. Euro key. Who was that? Chintan. Euro key broke the 2015 high near a 58.20. Euro key looks like this. Yeah, but I'd watch this 70, the 58, basically 56 handle. For a couple of different reasons. Give me 1 second. Yeah, this is actually a really interesting setup I was looking at. I don't think it was last week. Let me add the June open. Again, I'm going off the cuff here. I haven't really looked at this recently, but the one thing I wanted to highlight was this median line. Doesn't get much cleaner than that, guys. Literally pipped it right into resistance to the downside. Again, 2 days held below the break, instant support. Okay, and here's the upper median line parallel. It coincides with a 786 retracement from the September highs of last year. So again, near term, I do want to be very mindful of this resistance. I wouldn't call that a breakout. Remember, Chintan, for us to validate this, it needs to close above it, man. A spike high into or clear through resistance and a pullback close below is not a bullish thing, right? We actually need to see this close above that region to get the go. That being said, I'm very cautious of long exposure until we get through that region. All right. Even if you take a basic median line structure, this dates back even further. If you guys remember for this, we were almost in this for the entirety of 2014 before the break. Actually, we were. I'm sorry. The entire year we held this structure, right? And that's a basic trend line, upper median line parallel, also coming into focus. So in actuality, a breakout play from here, there's tons of upside potential. If you get it, I'd rather be looking, since we're looking for a possible Kiwi correction, since we're looking for the euro to spike into another high, possibly look for a level here to try to get the short side on it if we do get another test of that major key resistance. On the near term, and we are over on time, but I did want to get this question out because it's a very interesting pair at this point. Let's just see real quick if this gives us anything interesting. Stop traffic. It does. All right, real clean, in fact. Touch, 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 break, resistance, 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 break, touch, touch. This is going to be the near-term level that puts us out, gives us a little bit more of a conviction pull lower on the immediate sense. You've already gotten a trigger here that's given out. But I just want to take a basic retracement now that we've had some conviction that we're peaking at a high. And that's not just based on the reversal that we're getting, guys. Some divergence too. True, it's an overbought, but it's there. Price action making a steeper high. The oscillator making a lower high. And a basic retracement should serve us pretty well here to see if we have any confluence with that median line. Yeah, it doesn't give us much. Doesn't give us much. In fact, the 50 shows up right here, right around 54.30 on a correctionary stance. Wouldn't necessarily stress the 236, guys, or that 38.2. So here, if you guys want to take a picture of this before we go, let me just clean it up for you real quick. Okay, it's not the cleanest. Got a little overshoot here, but you can see what I'm talking about. And that gives us a near-term support also right around here on a downside break. All right, and this is going to be your sort of major key area that you want to be cautious of for support on a breakdown for the euro key. Again, just be mindful. A breach above that key resistance, you're probably not going to get an opportunity to scalp it, but we'll look for the pullback to get back long. There's just too much stacked up here for me to get any type of excited until we get a close above. All right. Chintan says, I'm looking for short triggers, Mike. Many thanks. See you next week. Have a fun with the print tomorrow. Chintan says, we are looking for a bouncing Kiwi, so it would be advisable to look at Euro Kiwi short after such a high run. That's what I was asking. Chintan, I'm with you. You kind of draw my attention to something like this, and I'll just hang on it for a while. So, guys, best of luck trading tomorrow. Thanks for everyone who attended. As always, your feedback's been great. There's a lot of new things that are coming to the site soon, hopefully. So I do appreciate all the feedback you've gotten. Again, you can always send it to info@sbtradedesk.com. You can feel free to send feedback to myself or Jamie E as well. Again, best of luck tomorrow. We will see you on Monday. Remember, public webinars for free on Daily FX, and then we'll be back here at 2:30 at Tuesday, Wednesday, and Thursday on SB. We'll try to keep you updated on the SB squat, guys. Best of luck trading. We'll see you tomorrow. Cheers.